Hello, Nicky Hungerford with Denver-based Universal Lending. So I just finished my 10-hour continuing education yesterday, and one of the biggest things that came out of it that I just feel is so important in sharing with you today is that the good faith estimate as well as the truth in lending disclosure are going away. That freaks me out a little bit, and as well as it will freak everyone else out. So I of course want to get a video out to you right away and make sure that I get that information to you. So if you'll take just a brief moment and watch this video, there is some huge information in here that we need to be aware of, because if you thought we were hearing before that people have bought houses before and this isn't how it was before, things have changed. I've bought many houses and I've never seen numbers like this before. Those things are all going to definitely come out with this new change. Now keep in mind, this isn't happening until August 1st of 2015, so we still have some time, but no time like the present to get the information out, get our heads wrapped around it. Please call me with any questions or anything like that, but take just a quick minute and watch this piece. Thanks. Hello, so this is the new loan estimate that will be replacing the good faith estimate and the truth in lending estimate. So this is proposed as to what the CFPB is saying that they will have available to us starting in August 1st, 2015. So let's just go through this a little bit so that you can see date issued, borrower's information, property sales price, loan term. This is just a good snapshot here of what the loan looks like. They kind of spell out real easy, in simple terms: loan amount, interest rate, principal and interest, if there's any prepayment penalty, if there's a balloon payment. So this is very similar to the good faith that we are working on now. This section here, this projected payments, this is new. And what's kind of interesting about it is it shows years 1 through 7, what the payment is going to be. And years 8 through 30, this is assuming that the mortgage insurance comes off of the loan. Now, for this example, this was a conventional loan, so they're giving you the estimates of years 1 through 7 and 8 through 30. Down below, we've got our escrows, so where we're going to be escrowing for property taxes, homeowners insurance. And then they give us the total estimated costs and the estimated cash to close, which I do like because this is a good snapshot of what the information the borrower is interested in. Now, page 2, very similar to the closing cost worksheets that we function off of now. We've got origination charges here in block A. In block B, we've got the things that the borrower can shop for, very similar to what we have now. Other costs, the government recording, prepaids items here. We've got initial escrow, payments at closing, anything other. You will see the owner's title policy show up here. Any other closing costs, things like that. Something that's interesting is we will be adding the cost of the inspection, as well as any surveys, any sewer inspections. We will be adding those things to this, as they are costs of purchasing a home. So watch for that change. Then we've got here total costs, closing costs, down payment, deposit, funds for the borrower, seller credits, those kinds of things. As we travel on to page 3, this is where we're going to have our trouble. This is not like we have seen before. This is totally new. So what it says is you use these measures to compare the loan with other loans. So in the first 5 years, $56,582 will be paid in principal, interest, mortgage insurance, and loan costs, with principal that you will pay off is $15,773. Now the annual percentage rate is still being disclosed, so that's the cost over the term of the loan expressed in an interest rate. Now, here's this new piece that is just going to throw everyone over the edge. They're calling it TIP, the total interest percentage. That's the total amount of interest that you pay over the life of the loan in a percentage. So where we used to say a $100,000 loan is really going to cost you $300,000, that's gone away. And what you're seeing now is what they're calling TIP, which is the total interest percentage, which is the 69.45. Guys, this is going to be huge, huge, huge. It goes through a little bit down here of what the definitions of those kinds of things are. It does say that if there's late payments, if you can refinance the loan, that where you do have the right to service the loan or transfer the loan, and then the borrower signs the document.